All right, traders, welcome on back for another fantastic edition of our Traders Talk Workshop this Monday, November 25th. All of us on social media, Facebook Live, LinkedIn, Twitter, YouTube, the work at Cyber Trading U popping up on the lower left right there. You can see my screen. You can't see the ugly face. I'll save you that. So great to have all of us here. At least happy early Thanksgiving for all of us all together here. All of our students, at least now, Lynn and Randy, Dennis, Robert, Ruslans, Lee, Bell, Margaret, Gillis, Brad. So Kathleen, Andrea, John, got Leda, Steven, got all of us here inside our live trading room. Hey, I'll tell you what, folks, for a Monday, for Thanksgiving week, I was not expecting to see the type of activity that we caught early this morning inside our live trading room. So all of us on social media, otherwise, hey, we look forward to having you inside our trading room. Scan that QR code on the upper left at the end of this webinar here. But here in Traders Talk, it gives us as good of a chance to talk about the trades that we were calling out from earlier. We have a bunch of new trial members joining us here inside our live trading room this week as well. And coming off of last week too, I see Dan O, Farzad A, Anna C, Thomas L, Karen L, Israel K. You got a bunch was just here testing our room out, seeing if this is something that's of note to you, seeing if this is something that you can do yourself over time. And for students like Randy and Dennis, Robert, all of us here joining us, you know from going through our classes and you know from being here in our room every day and in this workshop every Monday, really what we look for, right? Hey, the stock's popping up right now. We're not going to trade this live right now, folks. I mean, I'm just kind of in the passenger seat here this afternoon, this morning. This is Sava, S-A-V-A, a stock that we had on our watch list earlier this morning. It was coming off of like bad phase 3 trial news. It's actually down 82% as we speak. I had a huge drop off over the course of the morning here. So I opened up my platform and all of a sudden I see it on my losers list. I'm like, wow, really? This stock's Sava, because we've done very well on this thing over the many years. Probably turn this into a weekly chart. Yeah, you could just see some crazy action here going back into 2021. That was a real move that we caught back then, not some inflated reverse stock split number there. That was real. But over time, it's had a couple of days here and there, whatever news came out, led to a good scalp, led to a good day trade here and there over its time. Yeah, not as much today. I mean, this thing's down so much that perhaps you would look for the shorts to cover and for this to make some sort of fractional bounce back up. We were looking for that early in pre-market, and it got it. It got us that bounce around 945. Now, as you can see, it's trying to make a move up higher here. Well, what we could do is start off by going over this trade, at least analyze it from head to toe, and tell you why it's making the move that it's making right now. But at the end of it all, what we're going to go over here on Sava will be what we're going to cover on Soon, S-O-U-N. It'll be what we cover on BuzzFeed or any of the other stocks we've been calling out today. We have to know where our levels are. Just because a stock is going up doesn't mean it's going to continue to go up. Just because the stock is going up right now doesn't mean it's going to, doesn't mean it's not going to, look to make lower highs after and pull back. So every trade that we take begins with the entry. Before we focus on the goal at the end of the prize, goal at the end of the trade, we have to know why we're getting in and where we're getting in and how we're getting in. So, of course, mind you, our classes from A to Z, phases 1, 2, and 3 of our stock trading course, that basically covers everything, right? And we just came off the phase 2 class from earlier this morning here. So let's actually apply a lot of that here on this trade. So we're hoping for some sort of little bounce here. Little is the key phrase, because to have a stock down 84%, clearly something's broken. Clearly something is wrong with this stock, wrong with this company. It's not good long term. So this is going to be a potential dead cat bounce, a potential fractional bounce back up, short-lived bounce, and it'll come crashing back down shortly after that. But where do we have the big volume? This is what it looked like in pre-market for Randy and Lynn, Dennis, Robert, Lee, Ruslans, all of us here in chat, Chris M, Bell, Ron, got Dan, Alvin, Manny here joining us again. Where do we have the big volume here on this heat map? What do you think? Kind of a generic question I'm asking you there. Where do we have the big volume? There's a lot of ways that we could identify the big volume. Where do we have the big volume? 4. Pretty straightforward, right? I mean, there could be other prices, but the easiest one is at 4. There was an order that got broken through here. And then there was a new order that showed up actually after, right prior to the opening bell. If you look on the CVP column here, this column in the middle, follow my cursor here going down, $4. That's your highest point right here, right? Four. All right. Well, if it can hold above four, if it could break through this big level at four on the way up, maybe there's a case for it to move to five. Who knows? I wouldn't really be expecting more than that at first. If this craps out and breaks below four, if it stays below four throughout the day, you might get three. This stock we learned earlier, it's not breaking all-time lows. So, it's not like it's breaking historical, data there, but it kind of is based on the long-term graph and just seeing how much it had dropped overnight. So there's another historical level that we had at $3, matches up well with this iceberg. There's a case for it to drop all the way down there first. So there's no guarantee it's going to bounce, right? Easy to say right now in hindsight it's going up, but at least off the $4 price level, how did this play? How did this work out as an entry level for this stock? Well, as we said, it made a couple of moves. It looks like it bottomed out maybe here, but essentially once it re-broke through this big level on the way up, it wasn't your biggest and best trade, but it was a trade, right? As soon as it re-broke over four, you jump in as soon as it breaks through this big level on the way up. You get in at 401, 403, whatever the case right here. Seems like you have some room to make some money, right? Some. It's not long lived. You're not there for a long time. You're there for a good time, right? So ended up making lower highs after, came back down. I would have done away with this trade after. I wouldn't have expected another move back up afterwards, or guaranteed it, or felt confident within it. Maybe it's possible, right? Obviously, it did happen. But you know what? If it breaks below four, then you should expect a lower low. You should expect to drop back down even more to get down to $3, as we previously said. If it's not going to make a lower low, and the longer this is lingering here, I mean, maybe it does. But if it ends up trying to push back above the level, easy to say in hindsight, right? We know it went up, but not even that. This actually played exceptionally nicely off of that $4 level. It broke over four, it stayed over four after, and then offered you even another higher high from there, local higher high here, but still moved up even further. So this actually played really well. Not every stock does. You have to accept that really prior to taking any trade, but just that, hey, this actually provided another entry once it re-broke through this big level on the way up. Now, hey, was there another level that this stock actually offered us? Was there another big level if you missed it from four? Could you have gotten in from another price? Maybe. We'll find out in just a moment. Because we got the opening bell print. Well, unfortunately for you, if you missed it from $4, you're not out of luck. But what made $4 an even stronger level from what we were looking at in pre-market, you actually have like a 2.1 million share opening bell print that got filled. It's actually at the price $3.96, but between $4 and $3.96, about 4 pennies under that. No wonder why this held so well, because even if it were to have broken below four here, even if it were to have slipped here, you would have had 396 anyway to back it up. So that's what made this a nicer move. We'll admit that, right? Off of $4, it was actually such a good level, not only from the volume that was filled at four early in the morning, but that opening print, it did the job. Now, after that, though, it's tough. Looks like you had a little resistance here. Key phrase or keyword is little, not big, right? So I don't feel confident with this right away. 435, 431, a couple of smaller orders that got filled there. Well, you know what? It does move up to it later on here by 10 o'clock in the morning. It holds it, right? It does a really good job actually of kind of kissing that 435 price at least, rounding off there and coming back. So the more it could show strength, then perhaps that could provide as a more formidable entry level, right? The more that it could show strength there, like it ran up there, it basically false broke it. It came back down hard. Okay, well, you know what? Even after that point, it held back under 431, 435, the combination of those two smaller levels. Well, you know what? The same thing played out at least because the more times a stock is going to press up against a level, especially if it's weaker there too. But the more times it does it in a smaller period of time, that's where you should be feeling pretty bullish. So the timing in between these level tests was actually pretty wide. Had a lot of time in between these level tests here, pretty much. But there definitely was not a lot of time here between this test right before we started this workshop and then here, right? Like this would have been your sweet spot to try and take this trade. The more times it's testing that area in a smaller span of time, oh, that's perfect. So, yeah, there actually was a new entry level here, but it took some time for it to build. It was not easy to see at first. And if it's not easy to see, then it's not really that big. Like this definitely was not as significant as what we had at 4, as what we had at 350 here. So it took a while for this to be more of a trustworthy entry level for you, but it did it. It did everything that we need a stock to do. And hey, again, not every stock is going to cooperate. Not every stock is going to follow Fausto Pugliese and Josh Levitan from New York. It's like, we don't control the market. We only control our own money. All right. So if the more that we follow a consistent strategy, at least it gives us the opportunity to try and take that better move. So now at this point, is this going to keep going? Probably not because it's down 83 to 84% for a reason, right? So once the foot's taken off the gas pedal for a short squeeze like this, it's going to come crashing back down and may not even hold this as support. May just crap right back under that price and that's it. Got to be extremely careful on the pullbacks here. You got to be extremely careful for a stock coming off of good news. What do you think you got to be like when a stock is coming off bad news, right? I mean, let's go to Target from last week, if you don't mind, for just a fraction of a second, only because that was coming off bad news. And, it was down so much off earnings that traders would look for a dead cat bounce, but the trend was just straight down. So, it had a bounce to begin. It was short lived. It came screaming back down the other way. Then it became a better move. But, hey, I'd like to think that Target is a little bit different than whatever pharma biotech this is, Casanova Sciences, right? I think one's a little different than the other in terms of company and market cap and, maybe in the S&P 500 or, whatever it may be. All right. So, hey, the same principles that we just went through here to basically review and analyze this Sava trade, I want to use for soon, which is SoundHound AI. It's down 1.8% today. You wouldn't have necessarily expected that when it was holding pretty nicely here. It was trending back up pretty nicely. It was above Friday's move. So this was actually a nice stock to focus in on at first. It was a good stock to put on our watch list, to put on our pre-market list, whatever the case may be. But this was a little bounce here. You could have had something early in the morning. It was a much better move on Friday. And this is where I want to jump to an email. So I'm going to basically, answer a student here, unnamed, but they had sent over a journal, and just with a few trades. I mean, even prior to Friday's, stuff, but they were asking for me to go over soon here, SOUN, and essentially their trades, again unnamed. And I just want to show a snippet of the journal that they had sent over because I want to make a talking point just about why we're even journaling in the first place, right? Why are we even journaling to begin? But let's actually go over this first, though. We're going to cover Friday's move, then we'll dig into the trades, the journal, but otherwise, we'll see what happened here first. Why did this make the move in which it had made? So, of course, it went up, but it ended up making actually a pretty good move to begin the pre-market session there, actually prior to the opening bell. So you already started to see good momentum on this trade Friday morning here in pre-market. Where do we have our two big resistance lines? Where do we have our two big resistance lines here when you look at this heat map for soon? What do we got, folks? All of our students inside our live trading room. We got Patrick G. Aloha to you as well. Wishing you good mana, my friend. But otherwise, for all of our students here and Patrick on YouTube, what do we got? Where do we got our two resistance lines? 750 and 8, right? Absolutely. And great to see Lori K with us on YouTube here as well. Good morning to you as well, Lori. But absolutely correct. 750, $8. So those are the two lines that we need to focus in on here to begin. The more in which this stock breaks above 750, I'd like to think it can make a move up to 8. The more that it could break over 750 and run from 750, I'd like to think 750 would become support. Now, market opened up. We wait the first 5 minutes at least. So, you know what here? Bookmap wigging out a little bit here. Pardon me for a moment, folks. See if I can get this straight. That's fine, whatever. All right, so basically, market opens up. This chops around $7.50 to begin the day. You know, it pushes above it, back below it. Well, hey, the same rules apply. The more that this can stab over 750 here in this smaller instance, it's bound to make that better move. So it actually broke over 750 pretty quick, right? This pre-market resistance right here. This was actually just a little bit after 10 o'clock even. So it took a little time, but it moved up to it prior, held, moved up to it again shortly after, break. Perfect move off 750. Now, from there, well, our next level, our next big level is at $8. You know, 780 might be a smaller level in between. Makes a move, though, pretty quickly up to 8. And not only that, it blasts over 8, probably a lot faster and sooner than I'd be expecting it to here. For the first test of resistance, I likely would expect more of a consolidation or a false breakout at least. So this makes the more unexpected move. This blows right over this freaking level and runs. All right, well, you know what? Hey, perhaps that we could see support now at $8. Ran up towards 850, closed out the day just in between. So this is where I would say, at least going into today, going into this morning, like Monday now, since today's Monday, the 25th, just covered Friday, the 22nd. I would look for potential support off of $8 throughout the morning, unless if it gaps down or if it tanks right away and blows below this. I would look at $8 as a potential support level. Otherwise, let's see. It's not going to look as clean. I got to rip it right from the daily chart here. So the closing bell print from Friday from the end of last week was $8.25. I mean, that could be a big level to work with going into today, because as the closing bell print, not just from the previous trading day, but from the previous weekly candle, that likely will be a strong level throughout. Is it going to hold as support, though, for today? You could already tell the answer. Looking at this graph here, right now live, the answer is no. But let's at least plot a couple of lines, though. Looking at the heat map here at $8. There's our 750 line. If it were to drop that low, 850 as, you know, iceberg resistance here from the end of Friday. Let's just keep with that for right now. Just stick with our 50-cent levels and whole numbers. Today, this morning, it pulled down at first, so a little head fake here, where if you were to jump in initially here, this would be a great entry. This would be a great stab at it, you know, attempt. But if it's not going to make that slingshot at first, you'd probably go break even here, if anything. You're not going to try and like really risk too much if it's going to slam back down a little bit after here. Maybe get higher lows and it goes up. So I don't mind jumping in here if it's going to lead to an eventual shake lower. Just go out, break even, whatever. If you're watching this stock, if you're watching it, if you still have this on your watch list and on your radar screen, and you're seeing it move back up over 8, I would be keen to take it. It had a ton of buying from Friday afternoon or Friday morning on this trade off this $8 level. So this is like where I'd say it's kind of just based on your activity because today was actually a very active day. We've had Savo, we can go into Rigetti, we had the other quantum stocks, Bitcoin, obviously that's where my focus was. But like if you were watching soon, and even if you jumped in here, right place, wrong time as it shook lower, take a break even. If you're watching the stock still and it's coming back up, this might be easy to say, but you absolutely look to take the trade if it can break through the level again. This is not too long in between level breaks. And for this to move back up, the only reason I feel as confident to do so is, well, based off of Friday. We had a ton of buying from Friday off that $8 level. Did we not? We had a 622,000 share order that got blasted through. So I would hope for that to be support. After it got broken through his resistance, right? It moved up 50 cents higher. So I would just feel personally more confident with that heading into today. Now, at least from Friday, though, right? This had the move from 750. That was a pretty clean level based off the pre-market, right? The more times it stabbed over that level in a smaller period, it's more prone to make that better run. Now, I had a journal that was sent in from a student, again, unnamed. I'll basically go over a couple of them. And then I think they also ended up trading like SMCI and another one, a stock RCAT, right? Those were all movers from Friday that we traded. The thing I wanted to touch upon just with this journal, like in a public manner, is just, so we're all familiar and we all have a better understanding as a group. I don't want you to journal to just appease Fausto and Josh here at CTU. I don't want you to journal if you're not going to make use of it yourself. What I mean by that is, the most important part that I focus on with my journal is reasons for entering. I mean, making sure the entry times and prices are proper, clean, right? Making sure that you don't have incorrect data. But you got to make sure that you have at least a fairly good reason for entering a trade. So again, I did not name this student, so they don't, they know they're anonymous. But when I see the reason for entering and it's basically like going to detention, you're drawing or you're writing the same thing on the chalkboard 50 times over, that doesn't help you. And I know that. Like I guarantee that because of the students I've coached throughout the 10 years I've been with Fausto. But everyone's different as a human, but certainly for myself and my own experience, this doesn't do me any favors. Right? Like reasons for entry, broke resistance and returned over, broke resistance and returned over, broke resistance and returned over. I know that this doesn't help you out because trust me, the reason I'm repetitive when I teach is so that you have my catchphrases in the back of your head when you're trading yourself. But mind you, even when I go over this in journal in class, I say, I don't want you to write the same thing over and over and over and over and over and over and over. Like if you just write my catchphrase, broke through a big level on the way up. If you wrote that every time, that doesn't help you. The reason I'm repetitive is because that is going to be a better thing, when you're trading, so you could at least keep that in mind more. But when you're journaling, you do want to be specific with your reason for entering. Now, that's just more generic because that will help you as a that'll help you as a student down the line when you're studying. So, at least the reasons for entering, right? Or I'm sorry, the trades in which the student took. The first one was at like 9:41 in the morning on Friday. Got in at 7:59, $7.59. And they had stopped out at 7:42, I believe. So in and out. And then, the stock moved up a little bit later. They got back in on the trade basically at the same price. This time they took a good profit. They got out like right under $8. Made a good trade on this one in terms of like in and out, making good money. And then the last one that they had, they were in from, I think, the same price again. No, they had to have had this one incorrect. 11:22 is the time. So let's see. Oh, maybe. Hold on a second. This is where the journal can be a little sloppy at times. They had a great trade. We got in from 7:59 and they got out at 7:96, it looks like. I was at 12:05 Eastern time, just about right there. I see that. But they have one more they listed. So I don't know if that was a mistake or not. Either way, let's just go over the two basic entries here are from around 750 and then 8. So the first one, it's just that you want to have your entry price as close to the level as possible because that's going to give you a better ability to A, maximize your potential profit if it does run up in your direction, right? And then otherwise, B, it reduces your risk. Like if you get filled at 751 instead of 759. It's not to say 59 is an awful entry, but the closer you are to your entry level, again, we're calling 750 as our entry level here because, well, I think it's pretty clear that that was resistance all throughout Friday morning. And every one of us here in chat wrote back to me 750 and $8 as our two resistance lines, right? So if we are closer above 750, it reduces the potential loss that we first took. You do want to set your stop pretty tight under 750 here because we know it moved up a little bit higher later on, after 10:15 in the morning. That's easy to say in hindsight. It doesn't need to do that, right? So if it's not going to hold over 750 and run, there is a very fair chance that it can just tank right away down and maybe go down to 7. You go down to 6 on a total pump and dump move. We can't rule that out, right? So that's just where I say if we tighten up the entry, it's going to at least make the loss a little bit more digestible where it's like, all right, we're not like losing as much on the trade. Either way, in hindsight, the student makes it all back and then some because they do jump back in generally right over that level. If we can get in closer a little bit better, you'd be feeling even cleaner about the move altogether. And that's something I would say on any one trade. But they realize the big move shortly after, right? They're not getting scared out and they're taking just 8 cents or 5 pennies here. When a stock breaks through a big level, this was a pretty big pre-market level. Had some volume being built up right above it too. So it held basically that and ran. It needed to run after here. So it did what you needed it to do. But my student held on. And that's excellent because if this was such a big level here in pre-market, that's 750, then we should be getting a move closer up to 8, if not over 8, which is obviously what happened. But that was a great exit. That was a great exit on the second shot there. They got out at 796. I would have expected resistance the first instance of that level test. So, one thing I like that they're doing, this student I'm reviewing here, they're kind of just doing everything on tiny share size, right? The most they're trading is 100 shares, but they're just doing this on, I think, just like 4 shares. So if you're just practicing, one thought would just be maybe you take just a quarter of your position out here. Maybe you take half your position out. Heck, feel good about it. Take it all out like the student did, and they did really well altogether. I'm happy for them. Did it move up more after? Yeah. Okay, what's a way to try and hang on a little bit more and practice that part of it? Well, first, we do want to get you to be more consistent with taking the money and with making a pretty big trade here from one level to the next. So, there's no, bad doing with taking the money at 796 with when this trader did. But hey, if you want to take half out, take half out. If it pops and then tanks right back below 8 after, and then it goes down to 785, and then you take the second half of that trade out here, 785, I'd say that's a great trade. So you did really well. So you're not going to be perfect on the exit on every trade. And granted, we're not going to be perfect on the entry on every trade, but we want to do our best to try and be in relation to where the levels are. So overall, it was a great entry. They held on really well here, which I love. That was the best part of this trade from the student on soon. Again, I just want to make it known because I have to go through a couple of other trades in just a moment. I won't be able to go through every one of these here in Traders Talk. We can go over SMCI next. We can do that one next there. I have a student that wanted SMCI next. But just the talking point I have here is I don't want you to write like a 4-page thesis, a 3-page paragraph, be very wordy with what you're doing. No, it's going to take too much time. As much as I don't want you to make it seem like you're going to detention and writing the same thing on the chalkboard 5, 10 times over, I don't want you to make it seem like you're writing like an essay for each trade and like you're taking 2 hours to journal. No, we don't want that to happen. We don't want you to do that. So this is just where altogether you do need to be a little efficient with what you're journaling. Here, maybe you could write had pre-market resistance 71K iceberg was out there since 7 o'clock in the morning. When you study your journal and you know pick up on these relatively more specific talking points, they're going to sink in, right? And it might take a week, a couple weeks for you to realize certain patterns playing out, but next time you see an iceberg order out here in pre-market and it's out there for hours on end, perhaps you give it a lot more respect, right? So again, you don't want to be very wordy and you make it seem like you're writing like a paragraph, but you got to be a little bit more specific than this because it's going to help you. And I'm not saying to be more specific to make Josh happy. At the end of the day, you don't see me at your dinner table. I don't see you at my dinner table. We're just trying to make enough money to take care of ourselves and our families. Well, I'm just suggesting that the best way for you to do that is just if we're a little bit more specific, it's going to help you realize a lot more what to look for in these trades. All right. Let's go over SMCI because I probably have the data from Friday. Let's check. It doesn't give me the data from Friday. I can't go back that far. Let's see. Let's try. I thought I had the data from Friday here. Let's see. All right. So overall, though, SMCI, I got to tell you, and this we're just going to go over as a day trade. This was a great swing trade, though. Easy to say in hindsight. Captain Hindsight here speaking. We were suggesting this as a day trade only, though. So it's nice to see day over day into the end of last week, into this morning. It continued. For anyone that held, kudos. We were just calling this out as a day trade, though. Kind of in and out in the same day. There we go. There's Friday. Cool. 1 second. All right. So I'm going to kind of do the same thing. I'll review the move first, and then I'll go into the actual trade that my student took. All right. So I'll just say here to begin, easy to see here at this point initially, 32, 35. Those are the two key resistance levels at first. Now, before the opening bell hits, we do see a little bit more volume coming in at 33. We got 32, 33, 35, right? We don't really have anything on CVP sticking out here. Nothing here I'm impressed with in my CVP column. It'll be easier to see at times. It's not there. So just kind of move on from that. But otherwise, market opened up. Ding, ding, ding. This thing just took off like a rocket instantly. Within the first 5 minutes, it pushed up and above that 32. It didn't really, did it look back? Yeah, it did. It came back down there again. So later on within that day, it was like later on in the morning, it dropped back down to 32 and it effectively bounced. So that resistance did flip, right? It blasted over pretty quickly here. That's just where if you're not expecting the clean breakout initially, you're expecting hesitation at first, it's going without you, right? Because if you're expecting hesitation and it just pops right away, it's not so easy to just jump in. So it's just that later on, yeah, that becomes a great support level as far as seeing orders on the bid show up right at 32, a little under 32, something showed up. It moved. That was good. Now prior to that happening though, let's see, 33. It broke above that even pretty quick. It was starting to get shaky around 33, though. So it wasn't so nice off of 33 as it essentially was later on off of 32. Double topped, never really ended up making a clean higher high from the initial peak here. Came back down. This is all Friday's move, right? So let me just dig back into that journal for my student here. I just want to at least see the entries on this one. All right, so this was just two trades. So first trade was at 9:55, then the second trade was almost an hour later. All right, so first trade was at the price 33.83, and they got stopped out at 32.43. So they took a bit of a hit here. Now, either way, it wasn't so nice off of $33. It wasn't. It was shaking around it, as we said. Maybe there could have been a move here, right? But it's just, hey, looking back in hindsight, 32 is nicer to us than 33 was. Regardless of that, I will say this was effectively just more of like, I don't want to say reckless and put it in a negative connotation like that, but this is an entry that's kind of just in limbo. It's smack in the middle. It's smack in the middle of these two big levels here at 33 and then 35. Again, 33 wasn't so nice to us, but it popped initially from like under 31. So it was already popping and ripping and running. So the more any stock goes up, it's bound to make a false breakout. So that it could have happened at 35. It could have popped and dropped from 35 and then pulled back hard. When you take a trade in between two big levels, I don't mean to put it in a negative connotation for this one trade or this one trader. I mean this just across the board. I mean this to my own trades if I was doing this. You are gambling when you are taking trades in between two big levels. That's just where you got to wait for it to either pull back and build that support, or otherwise look to try and see it blast through the next level. And if it can build support from there, kudos. But more often than not, you get the pullback. It's just that here, when we take a trade at like 33.83, for instance, there's no reason to in relation to what this heat map offered us. Because 32 was our stronger pre-market level here initially, right? Like that looks easier on the eyes. 33 built up as some sort of level here prior to the open, but it's not as big as 32. And it's definitely not as big as 35, right? So I would be basing my entries off of at least this, or if it were to move up as high as this, then yeah, but that's where, again, I'm clamoring about 32 being that support. It took a while for that to happen on a Friday in the late morning, early afternoon. This is tougher to be more available here for, at least at this stage in the day. Just drop in. If you're at your desk and you're watching this thing and it was on the top of your mind, yeah. But, most of us are looking the other way here at this point. We're just getting our weekend together pretty much. And for a mid to late morning Friday, again, if you're there, great. If you're not, don't be surprised. So overall, though, I think the second entry that they took was at 10:45 in the morning, and that was when it was trying to at least break high of the day here. I think they were trying to base the entry off of maybe $34. But again, this is just where when you look at level 3 or level 4 here, you see the heat map program, and not every whole number is going to be as equally strong. When we talk about 50-cent levels and whole numbers, not every 50 cents is going to be equally as strong. For a $30 stock, I would just use whole number levels there. But even as such, not every whole number level is going to be as strong. 32 is larger, 35 is larger. 31 didn't seem that big. 29 doesn't seem that big, right? So that's just where the more that we're prepared to take these trades, meaning, trend is a big portion of why I'm taking a trade, right? But if I don't know where my key levels are, then I don't have any reason to take a trade. If there wasn't so much buying off of $8 from Friday, I wouldn't have been as jumpy to say, oh, eight's a good level. Look what happened after here. Ooh, little iceberg order showed up to give it a boost, right? But if we didn't have as much buying that came in when this ripped above 8, I wouldn't be saying that. So every trade that we take begins with the entry. It begins with, why are we getting in? Why? I sound like my 6-year-old niece Hannah. Why? It can't just be for broke resistance and returned over. If trading was so easy that for every time a stock broke a resistance and returned over, that it made the perfect move, Patrick G and Lori K would not be on a YouTube stream right now, listening to a guy with no face talk right now, right? I'm not showing my webcam, of course, right now, but I'm just joking where I say if trading was so easy, we wouldn't be in our trading room. We wouldn't be here. We'd be, in Margaritaville permanently. That's where, Rigetti off of $3 actually was a pretty good move initially off that three, but it stopped becoming a good trade. Here, when it had good direction, kept retesting this big iceberg level that was there. Hey, it made a good move. Good move, ran up. Resistance might flip to support, might, but it eventually weakened out and now it's done for. Now it looks dead. But it was a good trade from earlier today. If there was no big level here at $3, I'd say it would just be like a nice trend up. I wouldn't say it's a nice move today. A move consists of a level. So that's where even getting back to Sava, hey, we had that $4 price. This was not a good move if we did not have $4 act as that key level. Even here, I wouldn't expect support to hold so cleanly, but if it does, all right, well, as long as it makes a higher low after and a higher high shortly from there, then there's still reason to think that this might make another pop. But it's all because we had this form as a level. This was not a big level to begin. It had to prove itself. And since it broke over it and ran, all right, maybe there's the prospect of this being support. But even here, if this doesn't hold over our level, if this doesn't, if this breaks under this level and stays under, this doesn't nip under and over and just kind of crashes under and that's it, then there's no trade. So that's where I say there has to be a reason for taking a trade, right? It can't just be the same redundant, Josh catchphrase all the time. When I compare myself to one of those Toy Story dolls, one of the, dolls that has the string from the back and you pull the string, say the same 5 lines over and over, a little self-deprecating, yes. I do that with reason so you don't have to do that yourself when you journal. We want you to be a little bit more specific yourself so you can go back yourself afterwards in hindsight. Listen, I barely remember what I had for breakfast in the morning. So that's where at the end of each week, when I go back on my own trades, I go back on my book map and review. Well, it's more refreshing to me when I go back and see my own thoughts out there. And if they're more specific thoughts than just, more abstract, generic thought, it's going to make me think more deep. It's going to make me think more critically, right? It's going to make you become more reactant down the line as a trader. All right. So, hey, we got to just go through a couple other emails or questions at least. Here, I just got another chat from someone else just asking, just in relation to SOUN, can you provide an example of a journal entry? Maybe I did that just before. I'm just catching this chat right now from students. So, yeah, I mean, we kind of went over it before. Like, let's say if we were to journal the one from $8, let's say like, oh, we took the entry from $8 here. Okay, what's our reason for entering? Well, we could be as simple at first as saying big resistance from Friday, initially testing as support today. That's a little bit more specific than just, what my trader here otherwise was sending into me. So like that would be one thought. Now, otherwise though, let's look back on that Soon trade. Hey, if you're able to go back here, if you have Bookmap, you would be able to go back. If not, then I understand it where you wouldn't be able to be as in depth. Hey, if you're looking at the heat map from today and you're journaling the trade from today, then you could at least use this. I don't know if you're able to go back from Friday of last week on Bookmap, from yours. But one thought would be you can comment on the size of this iceberg, because if I were to see in my own journal, a stock broke through a 556K order, that stands out to me going forward as far as like, okay, well, that resistance, if it got broken through and the stock ran up 50 cents higher, then that solidifies my thought for this to be support, right? So that doesn't need to be as worded in terms of like a long paragraph. You could simply say like 550 plus K iceberg order got broken through on Friday. Stock ran up 50 cents higher, was looking for that resistance to be support, right? That's not too wordy, but that's a little bit better than what my trader was sending in to me just from here before. Broke resistance and returned over. Because hey, this type of entry you may not be taking every single time. There might be another stock you're looking at that is just cleanly moving up, 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 and you're just seeing it break over resistance. So, hey, you want to be a little specific on certain trades, like on SMCI. I don't think there was much of Friday's graph that we were able to use here because it kind of just moved up this morning in pre-market and then held higher low from above Friday's chart and then ran. So you can't really use Friday's graph as much there. And that's fine. I just, you just realize that after the fact. But like for the entry off of 32, if you were looking for that support from 32, hey, 154,000 shares iceberg. The more that number you see in your journal and on Bookmap and on your own reviews, just it stands out more when you're taking your next trade. Like, hey, if you're hearing me say, oh, there's 200,000 shares, well, you might remember from your journal that you reviewed last week. Oh, yeah, that's right. That 75-cent winner I caught on SMCI broke over that however many thousand share iceberg I wrote, whatever the hell number was back then. It was 200,000 or 153,000, right? Just when you remember that you wrote a pretty large order on your journal and it worked out really well for you there. Well, if you hear me say some sort of order that's pretty similar sized, you might want to turn over to that. That might be, noteworthy for you. So that would just be a thought as well. Now, I will say though, really quick, so just to kind of finish up on that journal or finish up on that email from that student, we go over journaling in the phase 1 stock course. Phase 1 lesson number 4. I strongly recommend for everyone, not even my trader that emailed me that first question. Just everyone, make sure that you go back on that journaling class if you haven't watched it recently, because I really go, and show you how to be efficient with your journaling. You don't need to write a 5-page thesis. Don't overdo it. If you're overdoing it, it means that you're not listening to me telling you not to overdo it, right? So you don't need to go too haywire with that, but otherwise, at least you do want to be a little specific. Now, there was actually a couple other questions sent in from that journal from my student before. So if I could answer these very quickly, kind of lightning round here, if you don't mind, it's my trader here. I'm interested in your thoughts on my trade entry process. I think it aligns with your teaching. Okay, I like this right away because we just talked about being process oriented. So, my student here, the same one that sent me a journal just before, wrote to me his trade entry process. And, let's see if it aligns. Step 1, determine the stocks to trade via the trading room. Start and stick with the list, work your way through that watch list. You want to stick with like a group of like 2 or 3 stocks that we're putting on our watch list, because at least out of those 2 or 3, you're going to focus in on the finer details, at least of those 2 or 3, compared to trying to focus in on like 10 or 12 stocks and trying to focus in on the finer details of every one of those. You're not going to be able to. Trust me, I know from my own experience. So that's a great step 1. Determine the stocks to trade via the trading room, the watch list, but hone in on like a group of 2 or 3 there, I'd say. Step 2, I have a Thinkorswim workspace set up to review 4 stocks. There we go. So he has 4. All right. Yeah, 2, 3, no more than 4. No more than 4. That's fine. With the 1 minute, 5 minute daily charts, he's got time and sales, got level 2, perfect. Now I will say to my trader here, if you got Thinkorswim, you should have Bookmap set up. You should have Bookmap, that heat map program via Thinkorswim. You could get it for about $40 a month. Strong recommendation to consider that down the line. My student here at least uses NASDAQ Book Viewer, so at least they're on that. They write to me here, step 3. They use NASDAQ Book Viewer to determine the resistance levels in addition to the levels that you call out in the room to chart lines. I love that. Perfect. Absolutely. Number 4, I then set the first trigger is OCO orders on Thinkorswim with the stop limit buy entry above the resistance, the stop limit below resistance, and another stop limit below the next big resistance for profit taking. Meaning they're mapping out a trade by using what's called a bracketed order. They're trying to take a breakout entry above resistance using a stop limit order. Yeah, I think that's a good idea. Situational though. I could probably better explain that to you on a coaching call to my student, which I'm remaining unnamed. I know that they're a new gold student, so they have a number of coaching sessions one-on-one that we can just work on tomorrow, even or even later this week. Just we'll find a date time and we'll be able to talk more about that. It's a good plan. Just it's more situational where you use a stop limit order to actually enter a trade, like to buy. Um, over resistance is when you would do it. So that's a great thought, right? Number 5, I monitor the stock movement and adjust the orders as needed. Perfect. And then 6, when you guys call out a stock that is moving that is not on the original list, I will replace that one, or I will replace the one that is not moving well with that one, the one that we're now calling out, so that I'm always monitoring for stocks. Um, yeah, I like all of that. I like all of that, absolutely. But the key, though, I'd say is, if you are at your desk early in the morning, let's say like 8:30 Eastern time, it is right then that you should be planning your morning out. So there are times where Fausto or myself will finish up the morning meeting, that first broadcast in the morning. We might finish it up at like 9:20 in the morning, especially today of all days when we had such a big watch list that Fausto posted, rightfully so. I mean, shit, if I did the meeting today, it would be a 50 stock watch list. So, there is just too much on the gainers and losers list. You should not be waiting until 9:20 in the morning for him to post that list in order for you to begin your preparations. So that's just an out loud comment to everyone here. But if you're at your desk an hour before the market opens, you should absolutely be seeing QMMM moving up. You should be seeing PLTR as we're talking about it in the room, or QUBT or SAVA. Like we're chatting about all of these early in the morning. So the hour before the market opens up, you should be planning out for about 2 or 3, maybe the most 4 different stocks, and go through your Nasdaq book viewer then, well before the open. Go through your book map if you have it, well before the market opens. It's going to give you the best ability to hone in on not just the larger levels, but the ones that are out there for a long amount of time, right? Like we said with Sava, $4. Now I got my book map all wigged out here. Great. No, it's just to say that, hey, we had resistance. We had a big level rather at $4 on Sava. You don't need to wait until 9:20 in the morning to start preparing that. That was there at 9 o'clock. That was there at 8:30. That was there at like 8:07 in the morning. It started to build. So as long as you have the time to prepare, then it gives you a better ability, at least when you're trading, to be very redundant and look for that same breakthrough a big level on the way up. My best entries to buy a stock. Well, it's redundant. Yes, that is redundant. It's consistently the same. It's directly after it breaks through a big level on the way up. The question is, how do we identify these big levels? How big is big? Not every whole number is as equally strong. That's where you need to take the time in pre-market, at least for the morning session. Even right now, you're not just jumping into a stock right away. You got to know where your levels are. You got to take the time to look at the graph. I mean, this is easy to say, but you got some good chart resistance around that 832, around like right there, 828. The combination there That's easy just by looking at the chart. All right. Are there orders out there that can back that up or, show resistance there too? The more evidence that we have, then it makes it easier for us to make that conviction of, well, that's a big level. All right. The more times that stock is pressing up against it, I'd like to think there's a good case for it to break over it. Well, shoot, if we turn over to a stock and it's already blasting over a big level, or it already just did that recently and it's moving off of it, then perhaps that resistance we could try and see become support. That's more or less what I'm honing in on. I know there's a lot to, watch. There's a lot to listen at. There's a lot moving on this screen. This isn't even my like actual trading platform. I got to show my order bar, my level two, and my scanners and everything else. Listen, there's a lot happening on your actual trading platform. The bright colors, the fast moving numbers, all the different programs. Just realize that yes, when we're trading, we are focused on the basics. We are focused on a consistent process. But just to mention one more time, from my student here and everyone else, when you journal yourself, you gotta be a little bit more specific. I know my student here is only doing 100 shares or maybe even just 4 shares at times. So they're doing it the right way. They're not risking a lot of money here because they're not trying to like hit it big right now. They're learning how to hit it big down the line. But we do just need better reasoning because if we are going to look to increase our share size and start risking tens and twenties of thousands of dollars or hundreds of thousands into one position, you got to have at least a little bit more specific reasoning, right? The reasoning is consistent every time or pretty consistent from time to time, but it's got to be a little specific. All right, question from Farzad here, and then we're going to actually finish up Traders Talk, just running a little after 1 o'clock right now. And I think Gillis just had answered for me here. I appreciate you, Gillis. And Farzad was asking, is NASDAQ Book Viewer also available on Interactive Brokers or Questrade? So yes, absolutely. Gillis is correct. You can go directly to the NASDAQ website. It's not going to hyperlink here. You're going to need to copy and paste this into your own web browser there, Farzad. But datastore.nasdaq.com, if you go directly to datastore.nasdaq.com, it's available right there for $15 per month, right? Otherwise, on Interactive Brokers, IB has a program built within their platform. It's called the Book Trader, the IBKR Book Trader. That quintessentially is the TradeStation matrix. That will show you essentially what we nickname as level 3 data. So the Book Trader program built within Interactive Brokers is a really good tool. Very good tool, folks. All right. So, hey, I think that we're going to finish up at least here for the meantime. We got class later on today. Don't go anywhere, folks. We got a small break in the action, at least for right now. We'll be back on the mic in our trading room at 2:30 p.m. Eastern later on today. And then we have class, the Phase 2 stock course, continuing at 3:05 Eastern later on today. We're going to be talking about charting the market. So staying on topic, at least with our daily chart, weekly chart, monthly chart. We talked about historical charting just earlier this morning. Well, we're going to talk about historical charting, but with the S&P, with the SPY, how most of these stocks that we are trading today are following just a major index, the market altogether, how you can anticipate larger market-based moves by following the cues, by following the SPY and SPX, NDX, whichever. So we'll cover that later on today, 3:05 p.m. Eastern time, folks. Hey, for all of us on social media, Facebook Live, LinkedIn, Twitter, YouTube, the works, don't even think about this just yet, our course schedule, because that's something to think about down the line as a student. As far as joining us inside our live trading room, we encourage you to at least do that. Scan the QR code on the top left of the stream right now with your phone, with your camera. Just get you a week-long trial to our live trading room. Comes with all of the prior recordings of this workshop, comes with the audio commentary inside our trading room in the mornings, the afternoons. Obviously, we account the half day coming up on Friday. If you do decide to join us, obviously, we'll give you the extra day there, no sweat. But we look forward to having you inside our live trading room. If you're not as fancy with your phone, with your camera, just scan that QR code. Otherwise, you can go right down. I didn't change the. That's the one thing I forgot to do here. Pardon me. See if I can get this changed. There we go. On the scrolling blue banner below, pardon me there, ctu.co/trial. That will take you right to the same page. We look forward to having you inside our live trading room in due time. But for all of us there right now, Farzad, Margaret, Larry, you got Lawrence, you got Steven, you got Lynn and Randy, Michelle, Ron, Phil, Danny. Hey, we'll be back later on today, folks. If you are not joining us throughout this week, if you are stepping away after today, hey, folks, I just want to say happy Thanksgiving to you and your family. If you are not celebrating Thanksgiving, if you are not within the United States, well, enjoy the day off either way, right? Obviously, markets are closed on Thursday, half day on Friday. But for all of us celebrating, wishing you and your family a happy and healthy Thanksgiving, happy and healthy holiday season, of course, ahead. And again, we'll be back next week for Traders Talk, folks. Talk to you soon.